Should we buy or sell Cutera? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So I do have a megatrend here that I call body modification. And we do see that Cutera here is under laser-based treatments, as we do have 101-ish% here from the low, and 9-ish% away from the highs. So here is the company's website, Cutera. Aviclear, the future of clear skin. Breakthrough technology that drives practice success. So here you can see some of their devices. So here are some face and body solutions. So body sculpting, skin revivification, pigment lesions, hair removal, tattoo removal, vascular lesions. So basically they are in the whole, what I call body modification business. So here is the long-term chart, weekly data points, and we can see that this is definitively trader's paradise. We can see humongous rallies, but also devastating sell-offs. So here you could be long and make a potential 430-ish% gain. That is obviously a lot of fun. But the bears, they went medieval and triggered a minus 78% sell-off. After that brutal sell-off, we got an astonishing rally of approaching 200%. So this is extremely tradable. What I find interesting right here and right now is that the stock has recently gotten up to a level where it has failed all the times in the past. So let me draw that in. Fail, 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 fail. So unless the current situation is significantly different from what we have had in the past, then this is a bit dangerous. It's a dangerous level based on the history here. There have been people who have tried to go long, bullish, and make money, but they haven't really been met with much success. So the level is guilty until proven innocent. So here as an example, on the daily data points, you can see that here, on the, what is the date? The date is on the 5th of August, 2021, you had a bunch of people who really tried to trigger a breakout for Cutera. But you see that this one failed. And from that high, we did get a sell-off of minus 47%. Let's look at some of these other indicators. Well, are there time cycles here? That's the question as well, because it does look like one of those that could be a bit time cycle-ish. Yeah, there are some kind of time cycles here, to some extent. They have differed a bit over time, though. So based on the time cycles, it could be that current rally is part of that rising phase. That would be bullish. The thing is that we have already seen a very substantial rally. So we need additional data here to see where we should lean on the technicals. So in terms of accumulation distribution, we do have a bit of an interesting pattern here in that we have lower highs on accumulation. So you see that here, during this rally, we got up here, but then a lower level here, then even lower level. So even though price-wise this is at an almost the same level as here, you see in terms of accumulation distribution, it was much lower. So that's a bearish divergence. In terms of RSI here, we are at a risky level. Most of the time in the past, we have not been able to get higher. But during some of the previous peak rallies, we did get a bit higher before we had the sell-off. In terms of distance from the purple 20-week moving average, and also the 50-week in green and 100-week in blue, and also the red 200-week moving average, we are currently at a high level that has triggered prior peaks, but there have been times where we were higher. So we don't have like a screaming short. Looking on the daily data points here, we do see here that in terms of the RSI, the previous times we had this level, it was here. We did go a bit higher before the sell-off though. Another time was back here, but during this rally, then this current RSI nailed the high and you got a nice short. distance from the 20-day, 50-day, 100-day moving average, it's currently at levels that were very shortable in the past. I think the line in the sand for Cutera is overbought, and we also have horizontal resistance. So in terms of giving the technicals a bit of a rating here, so it is of course bullish that the stock has been able to rally up to flirting with like a breakout. The problem is that we are also at a level that's been a fail level multiple times in the past. So I do think I will lean bearish here, notwithstanding that we have obviously seen a rally. It is just that we are at a prior fail level, and we also have some overbought readings as well. So here is the seasonality data for Cutera. We do see here to the right, looking at averages over the last 5, 7, and 10 years. We usually see a bit more strength heading towards March, but then it usually gets substantially weaker here towards early April. When we look here to the left, over the last 5 years, we do see that April and May are significantly weaker than February and March. Over the last 10 years, we do see, let me just draw that in. It is pretty clear that the seasonality is bearish towards May. And then we look big picture and the last 19 years. The seasonality is very clear. April and May are some of the weakest months for Cutera. So given that the coming months, which are right around the corner, are just over a long period, they have been weak for Cutera. The seasonality here definitively is pushing in a bearish direction. I do think I will give the seasonality here actually a -5. Because this was a lot of data, and there's something about these coming months that's obviously bearish. And that also increases the probability that the bears will be able to use the technicals as a resistance level and sabotage the bulls' plans of triggering like a major breakout. So let's look at the fundamentals. So SACs, they have a number 3 hold on Cutera, D-value, D-growth, D-momentum, industry rank, top 45%, laser systems and components. I don't really agree with the industry categorization. I do think that this is more, in the aesthetics treatment category, because a lot of laser systems are used for other stuff, that is critical, for society and all of that. But this is Cutera. They have products that are highly discretionary. You do not really need to fix those aesthetic problems you have. So given the business dynamics here, it's just very different from like laser systems as such. Market cap $824 million US, no dividend whatsoever, beta 1.6. So certainly more volatile than the market, but that is to be expected. Looking at the insiders, buy, sell, buy, sell, buy, sell, buy, sell, 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 sell. So looking at 2022, the current year, there's been more selling, more acts of selling than buying. Let's look at the consensus estimates, like that. So 5 are covering the stock. Average price target is 15%-ish above. Highest is 24% above. Lowest is 9% above. Yeah, so we do see here that the analyst recommendations are from 2021 and 2020. So here's a $60 price target. That's the most recent development. Given that the stock is currently at $55-ish, it has almost reached this price target. This one is $65. That is more higher. Here we have $60, $55. So Cutera is in terms of the price targets, it's getting pretty close to that fair value, but there is some, more bullish fuel left here. Sachs, they were a bit lukewarm. Yeah, so maybe I just slightly give this one to the bulls, but I don't think I can really give the bulls more than a 1. Because the insider activity, it just didn't look good, when you looked at 2020 and you saw like a bunch of sells. And a lot of people, they're not going to just look, they're just going to look at the list of sells and not necessarily analyze how the percentage of shares sold and all of that. It just look good. So let's look at the correlations. You do have 77% long-term with the S&P 500, 69% with consumer discretionary ETF. In terms of the XLV, we have 72%, and XLV is healthcare ETF. And then you have 30% here, minus 30% with the dollar index. So let's just quickly look at, let's go to the daily data points. Minus 14% SPY, 20% negative on the consumer discretionaries, then 16% positive with healthcare, and minus 53% with the dollar index. So long-term and short-term, the strongest correlation is with XLV. So here is the chart of XLV, the healthcare ETF. You could argue that we have something that looks a bit head and shoulder-ish at the moment. You have let me draw it a bit better. Let's do it like this. You have a left shoulder, you have a head, and if we do get more weakness, then we will have a pretty clear right shoulder. So that would be a bit textbook head and shoulders pattern. That is a bearish technical pattern. If we go here to the daily data points, in terms of RSI and the PPOs, we are at a risky level here for the bulls. There have been times where we have been higher, but we are also at levels that quite a few of these prior peaks were marked with these levels. So the bulls, they are in a bit of a high pressure situation. Here is the relationship between Cutera and the healthcare ETF. So we do see that over a longer period, there's been a lot of things happening here. Recently, they have been moving a bit time cycle-ish, but not clean time cycles. On the topic of breakouts, we do actually have a potential breakout situation here. Yeah, so let me just draw that in. So here, potentially breaking out above these prior highs. So that's interesting. If we do get a breakout on Cutera and also in this relationship, then that could become a self-reinforcing feedback loop. But this would be a breakout that happens after a strong rally, and those are different. I am more bullish on breakouts that happen when there's a lot of fuel left, where maybe we have been consolidating a bit, flexing a bit towards the bears, and basically have a lot of fuel left. Now you need a bit of a euphoric rally to have like a clear breakout, and euphoric rallies are low frequency events, and I prefer to bet on high frequency events. Here is the seasonality between the pair. Yeah, usually see a bit more left here, a bit more bullish action from Cutera towards 29th of March, but then substantially weaker. Here we have the relationship between XLV and the SPY. Let me get the weekly data points. So we have gone from a period of outperformance here between February of 2011 and August 2015, and then we do have, it's a bit messy, but we do clearly have a bit of a downtrend, meaning that the healthcare ETF has been underperforming the S&P 500. You could make the case that we have some horizontal resistance levels here. If we go here to seasonality, what does it tell us? So in terms of here, actually on the daily data points, we do have a bit of a rounding bottom-ish pattern in development. So that could potentially be bullish. Let's get the seasonality data. So the seasonality data shows us that in green here over the last 5 years, we usually see healthcare outperform towards later June. That's also the general message over the last 7 years, and also in red here over the last 10 years. So we do have some seasonal outperformance on the horizon. So I do think I will give this one more to the bulls than the bears. What I don't like is that the XLV has the potentiality of forming a major head and shoulders pattern. That would not be good for Cutera given the correlations. But when we looked at these different pairs against each other, I do think that maybe it warrants a 3. So taking the average here of this data, we do end up with a -1. So the data is more favorable of bearish trades than bullish. A key part of a bearish thesis would be that we are at overbought levels and we have clear horizontal resistance. Every time in the past where we had these readings, it usually ended in it did end in failure. And this seasonality data, it increases the probability that we will see that the bearish thesis play itself out. A clear breakout above these resistance levels, it would falsify a key part of the bearish thesis. But obviously the other bearish things that we have highlighted would still, of course, be very much real. It's just that it's very important to have some kind of line in the sand as like a risk management tool.